All right, guys. Good morning. Welcome to Stocks and Coffee. Give me a shout out in the chat who you are, where you're from, and if you're drinking something. Like I've got my Caribou coffee here. Uh, Let me know what you're drinking. Tim, what's going on? See who else is in here. Lots to talk about today. We've got a big Friday, and we'll analyze how to game plan for this. That's essentially Trump versus China or USA versus China. Our game planning and what we should be doing coming out of this ugly candle here. Some stocks to watch. And I was going to go over some option stuff because we are going to be doing an options class, but we'll do that next time. And I think over the next 2, 3 weeks, we're going to do three or four of webinars or stocks and coffees. So be on the lookout for that. And of course, you guys know my contact information. Contact me anytime at all. You attend one of these, whether you're a swing member or not, you're part of the Bulls family. So that's singjd1 at AOL.com. Any questions at all, anything you want to talk about, shoot me a message. Bulls on Wall Street, there's a good post, 50 tips. I'm working on another one right now. My own site, Paul J. Singh, recently had a uh, article on float size that I think is helpful. And of course, you guys can find me on Twitter and Instagram as well. Let's see who's in here. Good turnout this morning. Tim, what's going on? Alex, what's going on from LA? Drinking the dark roast Lavazza. Bruno, what's going on? We got to get in touch. It's been a while. Bruno used to live out here in San Diego. Tim from Chicago. I know Tim well, drinking only water today, getting hydrated. Uh, Kurum, what's going on? We're going to chat soon. Uh, ML from St. Louis. We've got, oh, I'm saying your name right. Uh, Oh, it's first name, last name. Amish, what's going on? Chris, what's going on from Canada? Alicia from Florida. We've got Max from Cali. We've got Jorge. What's going on, Jorge? I know where Jorge lives, but I forgot now. All right, all right. So a lot to talk about today. Let's get to it. You notice here, and how many of you guys, by the way, are on TC 2000? And if you are you having issues right now? I am. You can see here if when I pull up my TC 2000, I get this message testing connection, and it will not log me in. And I tried to do the web version as well, and so it's obviously I think a side issue because some other people have told me they're having issues as well, and looks like a lot of you guys. So of course that stinks when we're going to do stocks and coffee because I like to flip through all my charts, but we'll get through it. I pulled up stock charts here. It's going to be a little more clunky, but we can still look at the stuff. The one thing is I had a watch list set up for what I wanted to talk about today. I don't have that, so I'm going off of memory, but I think I've got all of them. Tickers don't leave my head. You guys are probably the same way. It's just all tickers up here. So I think we'll be all right. All right, let's talk about what happened on Friday. And first of all, number one, don't panic. I know whenever there's one of these big moves and you've got some positions on and they get hit, there's this tendency to panic. Remember, this is just a blip. And if you do get stopped out of a few positions here, it's okay. You're thinking of your trading long term. And these types of things are going to happen once in a while. Remember too, when you're thinking long term and you have that long term mindset, not only does this type of stuff happen, but the opposite happens too, right? Sometimes you get caught in a big up move. So that this kind of stuff all balances out if you think long term. If you're focused on just Friday and maybe you got stopped out of a few positions, I know it can be frustrating. But again, change that mindset. Think long term and how this plays out over time. If you manage your risk well, shouldn't hit you too hard. And for us specifically in the me and all our swing members here, most of us were cautious heading into Friday. Now, that doesn't mean we had some kind of uh, ESP or some crystal ball where we could see that this was going to happen. Trump was going to come out, China was going to come out and do what they did, and Trump was going to retaliate. And now there's big back and forths. We didn't know that was going to happen. But what we were saying was there were concerns in the market, and the market was overextended. And anytime the market gets overextended and you start to see a lot of uh, bullish talk on while the market is extended, you start to see all this bullish talk on the CNBCs, Twitter, and all that. That's one where you want to get a little bit concerned and then really dig into market breadth. And that's what we had been doing for the last couple of weeks. And what we noticed, and a lot of swing members are here this morning, what we noticed was as the market was hitting high after high, the universe of stocks was actually narrowing in the sense that the stocks that were really moving, like in here, we were getting a lot of stocks. The entire market was moving. IWM was keeping pace with SPY. And that's always a good sign when we see small caps and mid caps moving. Usually I'd be flipping through my charts and showing you this. It's a little different here, but let me pull it up anyway. Here's IWM. And we can see here IWM through this period was very strong and it was starting to lag in here. RSP, which we really like to look at, that's when we look at the indexes and we want to look at the equal weighted ETF compared to the index. So SPY, not equally weighted. I think historically right now, it seems like every year it gets more and more historic, but historically now the top 10 holdings are eating up more of SPY. I think right now the top 10 holdings are about 36 to 38% of the S&P 500. So it's not equally weighted. Top 10 holdings should only be worth 0.2% each. And I think the top two holdings are like 6% right now. So it's very concentrated in that regard. So RSP takes care of that, takes the 500 stocks, and each of them is weighted 0.2. So Google is not weighted any more than Costco, than any other stock. So RSP had been lagging through this period. So we noticed that. We noticed that, excuse me, these indicators were lagging, IWM and small caps and mid caps lagging. We look at our own focus list, and again, I'd be pulling it up if I had my TC2000 up. But our own focus list, we have a list we call the Focus 40, which has between 40 and 50 momentum stocks that we're looking to swing trade. And that list, we weren't seeing as many good setups. We were starting to see pullbacks in a lot of stocks that had been very strong and leading the market, even though SPY was hitting highs. So that's what's concerning when you see the S&P 500 hitting highs, when you see the Qs hitting highs, but you see these momentum stocks starting to fall before that. And the market was becoming narrow, very narrow, where it was very bad or industry dependent. Those were the stocks that were really moving, right? We were seeing AI, quantum. Now we're seeing rare earth metals, and they were already moving before this news on Friday. And some other areas, some other stocks would be moving, crypto-related stocks maybe moving, and then we'd see other stocks that were leading starting to fall by the wayside, and that's always a concern. So going into this, we were already cautious. We had really narrowed down the amount of positions we had. And I think if you're paying attention to this stuff closely, that's why we use a top-down approach. We start with our market analysis, industry analysis, kind of looking at these things we're talking about right now before we even think about setups, entries, and the stocks we want to trade. That's the first step in kind of analyzing like how should your swing portfolio be playing out? What's the game plan? So every day we were saying, there are about 5 to 10 setups we really like for entries, but are we going to take them? And I passed on a lot of them because I only wanted to have a few stocks right now. And we see that has helped us. So we're not getting hit that hard. If you were in that spot, good. You got stopped. Either you're still in some positions. I did loosen stops on one position, Amazon, which was nearing the 200-day moving average. So I loosened that up a little bit to see if it can ride out some of this volatility. But if you did get hit, say you had a bunch of positions on, you were taking on a lot of risk, maybe your portfolio risk was more than 10%, 15%. In that spot, one, take this as a learning lesson. Two, would be put it in the past now. There's this tendency to want to chase that I lost, whatever I lost during this period. I want to get it all back. You can't think like that. You have to be patient, do your market analysis, and then look for some of these when the opportunity arises, which is our game plan here and what we're watching and kind of stalking right now. So we didn't take any positions on Friday. even though there was a big dip and maybe some of our stocks are at good spots. We're going to wait and see how this plays out. Okay, so let's get back. So that's a little bit on just handling what happened. Now let's talk about what happened. Essentially, China, and I'm not an expert on all this stuff, but China um, tightened up their rules related to exports on rare earth metals, a very specific area. And then someone answered this question for me. I didn't pay attention to it, but now that I'm thinking about it, Trump hit back, and initially it was going to be 25%, threatening 25% tariffs, I believe, just on rare earth metals. And then he upped it to 100%. And anybody who is really following this stuff closely, answer this question. Is that 100% on all of China's stuff, or is it specific to rare earth metals? If you know the answer to that, of course, we can look it up in a second. But if you know the answer to that, uh, just give me a message in here and let me know. Looks like I have some questions in here. Okay, just answers about TC2000, and then Hala is saying time to start using Trader Ad. I'm not a fan of TradingView. I do like Thinkorswim, but it doesn't allow me to do my industry analysis. Was not specified. All right, thanks, Digger. Uh, okay, all right. So we know what happened here. We know the kind of root cause of it. Now the question is, what happens going forward? And one of the keys is don't try to predict. Um, just have game plans, essentially, a plan A, a plan B. One thing that we can lean towards and we can look for, not predicting, but just look for this to happen so we can jump on it quickly if it happens. That is, we kind of know the drill right now. This isn't the first time something similar to this has happened, right? This has happened many times now. And if we go to notice here, and if I pulled this back deeper, you could see we were in an uptrend. Then the downtrend started when there were tariff concerns, right? And it was the first time we were really dealing with this at the beginning of Trump's presidency. And then they started to talk about tariffs. We really didn't know. It was concerning. And then there was the big decline here when all that stuff started to hit, right? And we bottomed in April, and we've recovered very quickly. This is a super fast recovery for this kind of downturn. Almost looks like a mini version of the pandemic low back in 2020. Um, and then there have been blips along the way whenever this tariff stuff, either one of two things, either Fed stuff or tariff stuff, right? And notice here, since the April low, when we were actually in kind of a bearish market, but since the April low, anytime we've dealt with this type of news that concerns the market has recovered very quickly. We can go to here, we can go to this spot here, and I don't remember what the exact news events for each one of these were, but they were essentially either tariff or Fed. The decline here, and there were some kind of mini declines in here, and then of course Friday's big decline. So we don't know what's going to happen. Maybe there's a lot of stuff that starts to play out next week. But in general, the market has recovered very quickly from this stuff. So I think plan A is watch for the dip buying opportunity and look at these key levels. Okay. So we know the drill. We know what's been happening essentially since April. So we know how this has played out, either a kind of next day recovery or the market dips a little bit, finds support, and then gets back on trend. And that's what we're looking for. That's essentially the game plan, the plan A. And that is, look for that dip buying opportunity. Don't just guess. Don't just think, oh, okay, it's going to happen here. There was the big decline Friday. Everything's going to be fine Monday or Tuesday. We don't know that. But watch, look for clues in the market. Look at how our momentum stocks are playing out. The big tech stocks and the other important stocks. How are they handling support levels that they might be pulling back to? The flights to safety. Do we see moving money come out of them into momentum and risk on type stocks? So pay attention to all that stuff. So we're going to be looking for buy the dip opportunities. And on my TC2000, I had a list of those stocks, and it's going to be kind of hard to flip through all of them. But we'll talk about it when we look at some of these stocks we're watching, and of course, big tech as well. Pay attention when these stocks pull back. A couple of things we want to look at, and I'll just do a little one of my patented ugly drawings here. A lot of our stocks have been doing something like this, right? And they're pulling back now. And watch for one, the pullbacks to key moving averages that everyone is looking at. Most of them have kind of burned through their 9 EMAs. That's always the first, the short term, the most short term kind of moving average. Then the key one, obviously the 50-day moving average. And then, of course, some of them are like Amazon are testing the 200-day moving average. So watch, do we see not only a pullback to these levels, but then do we see strength? That's what I look for, strength. And if we start to see strength, that's where we look to enter. And this should also be kind of corresponding with what the market is doing. As the market is pulling back, is it finding support at a key level? So that's the type of thing we want to be paying attention to. Some people use the 20 and the 100 as well. That gets to me the kind of too much going on your charts. I like to have one short term, which is my 9 EMA, which kind of corresponds with the five, um, the five simple moving average, the 50 moving average, and the 50 moving average. If you look at weeklies, it usually corresponds with the 9 on the weekly, and then the 200 moving average are kind of the key ones. So look at how your stocks are reacting to these moving average support levels. Then also more important than moving average support is price action support. So that would be if we have, like, let's say our stock was going like this, and then it had a big area of consolidation here. So there was a lot of buying and selling in this range, and we have this kind of supply and demand zone. And then we get a move out. Look for if it pulls back to that level and holds that level. What often happens, all these guys in here, they saw the big move. They're kicking themselves for not being in it. Then when it pulls back to this level, they get back in at this spot. So it's kind of the psychology behind it. So watch for these type of pullbacks, and often you get converging support where this last consolidation zone happens to be where the 50 is, and you get this converging kind of very strong support here. So look for these types of support levels for buy the dip opportunities. All right. So plan for the buy the dips. Watch the key levels, not only in the market, but with your stocks as well. And then pay attention to relative strength. Now, when I talk about relative strength, be aware of the type of stocks we're talking about. So naturally, anytime there's fear in the market, there's a flight to safety, and of course, those stocks are going to be showing relative strength. So, like the Dow stocks, the big, the Pepsis, the Cokes, the gold. Gold has been a flight to safety for a while now, related to the Fed, and if we and the economy. But if we pull up Pepsi, we can see here as the market was pulling back, look at the pop in Pepsi here. I didn't look at Coke, but I'd imagine Coke is, yeah, it started, not as pronounced, but you can see on Friday it was green while the market was hit very hard, right? And I would imagine, I didn't look at this one either, but let me look at Clorox. Uh, we'll probably see something very similar. It had been in a downtrend, but on Friday it was actually slightly green, and it should have been down 2% if it was keeping pace with the market, right? So this is not what I'm talking about when I say relative strength. We know these stocks are going to show relative strength. I'm talking about which momentum stocks, which areas, which industries in the market outside of the flight to safeties are showing relative strength, and pay attention to those areas, because those areas, they're usually two spots, and it sounds counterintuitive because they're exact opposites. The ones that really move when we come out of something like this. One is the areas that showed relative strength, again, not flight to safety, but just the momentum areas that showed relative strength. Those will often do very well when they come out of this. And almost the exact opposite, the momentum areas that were really beaten down, because now those are the areas that are most sensitive to whatever's going on. And when we feel good about it, they come back very strong. It's like we were really worried about those stocks, but now we don't have to worry about it anymore. And then they come back very strong. So it's kind of the two poles, the relative strength and the extreme relative weakness. Those do very well coming out of these types of scary events. So that's what we're going to be looking at. Buy the dip opportunities, again, relative strength and the ones that are beaten down. When we're assessing relative strength, pay attention to the momentum versus safety And then for key setups we're watching during this period, just what we talked about, essentially the trend pullbacks are really important. Another setup that I like is stocks that broke out of key boxes or ranges, but then get beaten down. So a pattern we like to trade is like say a stock has been trending for a while, then it consolidates and forms this box. And what we do is we play the breakout of this box. PanW, I think, did this recently. We play the breakout of this box. Um, and then our expectation is whatever this box range was, let's say it was 30 points. Say the stock had moved from 100 to 200 over, the last 8 months, then pulled back maybe to 170 here. So this is a 30-point range. Our expectation is when it breaks out here, it will go to 230. And that's kind of our target range here. We could trade it multiple times, but our expectation is it should be able to, over the next period of time, make this type of move. What will happen is because not on any reasoning of its own, but because of what's going on in the market, it'll start to fail and go back in the box and hang out here. And then when we come out of this, it'll break out again. This is one of my favorite setups. If you have some stocks doing that during this period, I think PanW, if I'm right, is doing that right now. And oh, wrong ticker. Yeah, so PanW it had broken out of this box here. You can see now is test right now is testing. It hasn't broke back inside the box, but is right at that. Here's the high here. It pulled right back to that level. So I'll be watching PanW very closely to see one, does it violate and then come back, or does it hold this level? And it's just a support play. So be on the lookout for kind of range breaks. This is a bigger kind of range, but even some, maybe trend just pulled back a little bit and then breaks out and pulls back in. Look for the remount of that range break as well. All right. So that's essentially what we're doing right now. I had a big list of stocks, more than this, that I wanted to go over. We'll go over a few of them in here. I like to be able to flip through them on TC 2000, but we'll just look through here. Let's actually I didn't mention some of the rare earth stocks. So obviously these rare earth stocks are moving uh, because of the news on Friday. The U.S. companies, or there's some Australian ones, U.S. ones. There's another country that's big on them. Canada as well. Let's look at some of the U.S. ones. Here's MP. You can see here they were already moving, and then you can see Friday MP was up 8%, started to break over the high, but then came back in here. You can see that inverted hammer. And if you guys have any stocks you want me to pull up, let me know. There's MP. This one has the perfect ticker because it has USA in it. That's USAR, USA Rare Earths. And you can see, look at this one moving. And then on Friday, moved up 5%. These things are extended, not necessarily saying enter them now, but watch for any setups that we might trade in these stocks. There's NB, another one. And this one was already moving. Look at all that good volume coming into these areas. And then TMQ. This one actually on Friday was down. I don't know much about this company, but I had already had it on my list for rare earths, and it broke out a few days prior. And then the quadruple U here, you can see it was up 3% on Friday. So definitely should have these stocks on your list, even as we come out of this. What I'd like to see is a pullback in these things that give us a good potential entry, even when the news on this stuff is over. So pay attention to rare earths. And okay, someone posted APLD. Let's take a look at that. Applied Digital. So I'm guessing this is not rare earths. I don't know much about this company. Big pop on Friday. In terms of not much to do with it, but we should definitely be watching this breakout for breakout type setups. All right, so we have our uh, rare earth stocks we're watching. Let's look at big tech. Karim mentioned Oklo. Oklo is definitely on our list. QBTS, IONQ, quantum plays, and then the energy plays, Oklo, VST, VRT, and a bunch of other ones. Battery plays like Plug all in play right now. Here, I'll pull up Aqua since we're watching it. You can see here at a key level, had made a high here after getting very extended, pulled back, and is testing the old high here yesterday. I think technically closed above the old high, but I'm not a big fan of this hammer right here. But it did show relative strength. Good that you caught that. And then we could watch this week for a potential entry. So I like Oklo. Here's VST. There's a bunch of the nuclear energy plays or energy plays. Uh, VST pulled back hard. We'll see how that plays out. Plug break is in the midst of a breakout pullback. We'll see where that one finds support. Amazon. So we are in Amazon right now. Notice that we really liked it as it was remounting the 50-day moving average, but the news came out on Friday and Amazon got hit very hard. Watch to see if it finds support at the 200-day moving average. And I've got my stop under that level. If you're not in it, I wouldn't jump in, but watch to see how does it react to the 200-day moving average. AMD, obviously, one that we've been watching, had the big breakout on that news, pulled back a little bit, is pulling back some more. I would love to see this pullback for a good potential entry, like a value play in AMD. Most of these big techs, you want to be careful with them because earnings are coming up, so you can't hold them that long unless you plan on gambling and holding through earnings. Apple was a little extended here and has now pulled back very hard. Apple, anytime there's China news, Apple gets hit. But notice here, it's testing this open gap here. So watch this level closely. Does it find support at this open gap and remount the 90 MA? If it pulls back deeper, how does it react to the 50-day moving average and this old range in here? Costco, been liking Costco here as it was, you can see here, it was choppy, not doing much, but had broke out and there was some good volume coming in as well. Pulled back a little bit, of course, on Friday, but held up pretty good and held up this breakout candle here. So we'll see how it plays out going forward. App had already been hit by some news related to how they've been using and reporting their data. Notice here, it was one of the strongest stocks in the market. Here's where it got hit and then held up well on Friday. I'm watching this one at the 50-day moving average very closely, which is also this breakout range right here. So I'd like to see if Apple can, not Apple, app can show some strength at that level. Hood has been strong and then got hit on Friday. This might be a great opportunity to enter a pullback in Hood. And then Google, watch for either a remount here or if it pulls back deeper, again, the 50-day moving average. Notice how oftentimes these correspond with other key ranges in the price action of the stock. Let's actually go over one more. Here's Coinbase. You can see here, we took profits in Coinbase here recently, and we're looking for a new entry because it's kind of doing this when a stock gets like 5% towards its all-time high, you often will see a float to that high, and I think that was in play, but obviously the Friday news. Look for where it finds support for potential entry. I think this one should be able to come back strong. Next week, big banks start reporting earnings. Pay attention to the JP Morgans, Bank of Americas, and so on. JP Morgan has already been pulling back in anticipation of earnings, a little fear going into the new earnings season. So watch if this thing, as it's been pulling back, I think it reports on the 14th. So that would be on Tuesday. Watch to see if it does have strong earnings and breaks out over the 90 MA. I think it's a slam dunk entry after it's been kind of beaten down. Okay, Jover is asking about Uber. Yeah, Uber is another one that I like. We had played it on the box breakout and took profits, and we've been looking for a new entry, and maybe we get it here if it starts to show strength. The key on this is to find support and then strength at support as well. All right, guys, we'll do another one of these very soon, and I'm sure TC2000 will have its issues figured out by then. What I'll be doing next time, of course, we'll talk about what's going on, but I want to talk about some simple option strategies that are you'll find very helpful, especially if you have a smaller account. You can use some leverage. Two, to protect yourself, to avoid getting hit hard, to kind of hedge your downside when something like this happens today and when we're in a volatile market. All right, guys. So enjoy. Some of you I know have 3-day weekends. Us traders don't. The market is open tomorrow. And I will see you guys very soon with the next Stocks and Coffee. Of course, message me anytime. And you guys know I run the swing service at Bulls on Wall Street. You can join there and get in the chat and our reports starting tomorrow. All right, guys. Talk soon.